The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, my pleasure to be here on this 14th day of June, halfway through the month, and what a fascinating month it's been so far. I'll be discussing it tonight in my webinar, 6 o'clock till 7:30 Eastern Time. Go to the front page of TFNN, what to expect in the latter half of 2018. This is a challenge. I hope I'm up to that challenge, but I think I have an idea of what we're looking at, what should work, and what we've got to be somewhat careful of. Well, let's run through the numbers. The Dow is up right now. No, it's down 1 at 25,199. Look at the E-mini, up 10. It hit a high of 27.96. This is the S&P E-mini. 27.96 yesterday. Comes down, hits the 9-period exponential moving average of 2773. That 9-period moving average has been basically the springboard for every pullback. The MACD is still good. This is the daily chart. Stochastic still excellent at 92%, but it has started to turn down. And what's really important about this particular chart is you see this Chapman Wave inside track repellent zone. The price has been repelled 7 times since it went into that area. So what happens over the next few days is going to be really, really important. That's why I'm talking about it tonight. I've already started changing. I had prepared for days and days. I've been preparing for weeks for this webinar, but especially over the last few days, I'm almost about to throw it out the window and go straight to the charts because it's so important what we look at. Actually, what I've now got is a real nice mix. I've got my usual coda phase, sort of the aspirational aspects of what you expect in a mega bull market. I've got, let me see if I can find this right now. Yeah, look at this chart. I mean, does this not tell you where we are in the world? That is the projected Jeddah Tower. And this is in, it's going to be near the Burj Khalifa, and it is in Dubai. This is a skyscraper. It's all part of this coda phase that I've been talking about for years, actually, but especially over the last year and a half. So this is above the clouds. This spike that you see is above the clouds. In other words, they are looking at sunlight all the time because on those few times that it rains, the rain goes below. So anybody above is looking at it. So peaking the densities, that's not the Jeddah Tower, Basil. It's a projected chart of the Dow Jones. Yeah, they go together, and I'll be talking about that this evening. Fascinating perspectives that we're going to get. I'm going to be talking about a lot of things. Hey, just to throw in this bifurcated market and what we're looking at right now. Back in 2000, the Dow made its all-time high about January the 14th, I think it was. And that was it. And then it took until March, and the SMHs, the semiconductor index, made its all-time high. And it's interesting because it was either January or February that the SMHs came into existence, because before that it was the SOX index. We still have the SOX index, but you might as well use the SMHs because you can get volume and all sorts of things, and it matches exactly the SOX index. So within that context, what have we just had? We just had for 2018, the Dow make its high on January the 26th at 26,616. Had a big rally up until from the lows that were made in the 23,300s. Had a pretty big rally to the 25,400s just the other day. 25,402 peak D in the Chapman Wave. Remember, the beginning of April, I had that webinar talking about the number of indices that had made peak Ds in their Chapman Wave methodology. in my Chapman Wave methodology in their chart formations. Well, all of a sudden, we've got the same thing happening here. But wait a minute. So we've got a January high in the Dow and a March high in the SMHs. Ooh, I'm just calling it coincidence for now. I don't see any. In January to March of 2000, there's nowhere you could go, whether it was family or friends, or the barber shop, anywhere you went, the ticker was showing, and people were only talking about their NAS, like their buddy, the NAS. All of a sudden, the NAS. It used to call them the QQQ or the over-the-counter, so we call the NAS, like my buddy the NAS. Well, my buddy the NAS turned around and just jabbed them because it dropped 85% after it made that March high. So what we're looking at right now is that I think that we've got something that dichotomous. It is the exact opposite. There is nobody talking about the stock market, or if they do, it's just that every month they automatically put money in, and it's doing well, so they're not even talking about it. They don't want to hex it. But what's really interesting is I don't think we can make a major top in the stock market without taking all the international stocks and without our market going to the point where people, and you go to the bank, even at an ATM in 2008, all you heard was real estate. Yeah, these young people, the first time they were buying houses, they were talking about real estate was their big buddy. Turn around and bap them on the nose. Then, of course, it came back very strongly. My thinking is we're going to put the whole package together before we make a major top. I'll talk about that tonight. But what's going to happen in the interim period? I'll talk about that tonight. Check it in. You get 1 month free of my newsletter. Every day you get calls like this where I'm looking at, let me just see if I can find it right here. I can show you, here we are. So within the context of the markets, every day I make a daily call, and every Saturday I send out my call on the week. I'm sorry, the call on the next week, but it's the overview, and it looks like this: daily, weekly, monthly, and I'll tell you what I'm looking at. In this case, the daily had gone to a buy mode. We've been long the Dow almost all since this last big phase up. We went once short just for a day or two. We went back to long. Now we've kind of made a change. And look, the H pattern I'll talk about tonight, how the H can go to an arch formation, go to a lowercase m formation. Here comes the big test of this particular formation. And the monthly chart is still very positive at this stage. The technicals have turned down. Price is holding. So this is what you get every day. I do an analysis of the Dow, tell you the parameters to watch for, do analysis of the E-mini, tell you what to watch for, and we cover all the issues that we're either long, short, looking to buy. There are stocks that are looking very interesting here to buy. A lot of stocks that are looking to short. Quickly, we'll do this. The Dow is down $2 at 25,199. The S&P, SPX.X, the S&P is up 8, having made a peak D. It's underneath that top candle, and we'll be watching to see what happens. The QQQs trading right now sharply high, up $1.70, made a new recovery high. Like F/C, that's a big help. IWM, as we go to the break, IWM is trading up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I've actually looked at the NDX 100. I was asked about that, up 72 at 7,278. New leg C in the daily. Should still go to a D. So this is what I'm talking about when I say bifurcated market, split market. There are certain stocks within a group, within a sector, that are looking great and some that are looking terrible. You've got within the sectors themselves, the NDX 100 could still have enough stocks looking good to rotate to make at least a leg D to the upside. That's what I'm looking at. And I have no choice at this particular point to really think that this is a leg C in the weekly chart. I could give an alternate count, but this is really a leg C and a leg F. Here I'm probably going to eventually give it a circle to say that there's a Chapman Wave instant restart in the monthly, and this F right now is really an F/B because the technicals are still pretty darn strong. It would take a move over the next 4 weeks to see the NDX 100, and if you don't mind, I'm just going to use the Qs because they got exactly the same patterns. The Qs at 177.52. The Qs need to hold underneath 170 at any point in the next few weeks. Once it does that, the daily goes into sell mode. The weekly probably will only go into a sell signal. That's this, as I say, bifurcated market. All right, now a couple of things. Gold, and this is really ironic. Gold had this whopping move. It made this arch formation. Then it made, I wonder if I've got it right here. Is that my CD? Yep. So I have patterns in the Chapman Wave methodology. And the one pattern is the lowercase h that keeps coming down. Eventually, it can turn into a rather large H formation that goes to another arch, which is like in lowercase m. And then sometimes they can do a third one. What's really important about it is that think of it as a rectangle. And what is my expression? A rectangle formation can last a lot longer than your patience. Let's go back to the gold. So gold spirals up. Where does it go to? It goes to 13. This is really interesting. 13.0, round number. It goes above the previous high in the arch formation, the one from the 25th of May, to 1312.5. And now it's trading at 1307. There's that H. I drew it in. Excuse me. I drew this in. And that says to me that we need to look at the euro. I'm going to come back to silver, the euro, and I have a whole webinar on the peak Ds, but it was really what to expect over the next few months. And that was that webinar on I think it was the 6th of April. And here we are once again, a peak D in the euro dollar currency pair. And this D has pulled back from today's high of 1.185 to a low right now of 1.161. We're at 1.162. So this is really important. Why? Because the monthly chart is still in a downtrend. The weekly chart has made the arch formation, broken the left side low support, and gone under the 200-period moving average, went sharply higher, and now it's below. You look at the USD JPY, which I haven't looked at today at all, so let's see, it'll be a surprise to me. Is it up? Well, this is interesting. It's got a peak B, great peak B in the daily, and it's underneath yesterday's high. But the weekly chart is just improving. It's walking the 9-period moving average. This is the yen, US dollar currency pair with the yen. Ha ha. Now let's look at the dollar. Remember, now, irony of ironies, we're still long, subscribers are still long the GDX because the gold miners seem to have been holding much better. They also have silver, which has been on a tear. Gold didn't follow. Is that nuts? That is nuts. But what's really important here is that the dollar is up 89 cents at 94.48, had a whopper of a move, made a trough, a leg D. If there's no new low tomorrow below 93.19, this becomes a trough D. And that weekly chart, I said, there's a reason why we've been wanting to hold long the dollar via the UUP, is because my reading of the weekly chart is still extremely positive, and the monthly chart is really improving a lot. Hey, half the month is over. Let's wait for the next half of the month to see what the monthly chart looks like. Meantime, the weekly chart says 95.04 will begin a leg D in the weekly chart. Be very positive if we can do that. Now let's go to silver. Silver was screaming to the upside. It's now pulled back from the highs. It's still terrific. But within the arch formation, if I draw this, what will you see? You can see two U-shaped patterns. I'm going to make it into one U-shaped pattern. And you've got an arch formation that formed yet another arch formation. Which basically is forming yet maybe another arch formation. So I'm impressed with silver. I'm not impressed. Remember, I said if silver can break into the 1720s, that'll be fantastic, but it has to have gold following. Without gold following, you just don't have the unity that you have. You've got to have synchronous moves in to really succeed in holding gains in any sector. And as to these metals, I don't think until gold can really break out into, now I'm saying not the 1315, 1370s, I'm saying absolutely 1325 to 1333. Now it has to not only prove itself, it has to say, not only am I proving myself, I am the number one lead. This is where money's going to go for the next 6 weeks or whatever it is. And it hasn't done that. All right, let's get back to our crude oil chart here. Crude oil right now, up a little bit, up 4 cents. Just stuck here. This is what I've been saying. I think that the peak D in the daily at 77.90 on the 22nd of May, the peak D in the weekly, and the leg D in the monthly says, you know what? Crude has had its big move. I think politics was the reason for the move up. Politics is going to be the reason for the stall between 68s and 62s over the next 3-4 weeks. Aha, TLT. The TLT is trading up 64 cents. This is Lehman iShares 20-year Treasury Bond ETF. Kind of stuck in a range. I'm going to do this. I'm going to say at 119.92, if there is a push over the next week in yield, in the TLT above 122.52 is the high. I want 122.60s. A push into the 122.60 says, you know what? Crude oil is stalling. Bonds and bond yields have been stalling, but a push into the 122s would say to me that the general stock market is probably going to be pulling back a few hundred points as that happens. Why? Because money will come out of the insecurity of equities into the so-called security of bonds. We'll see if that's going to happen. But in the meantime, back at the ranch, I can't get there. I'll get there in the next break. So I've got this all out of the way. Now let's do a couple of things. I was about to do it yesterday. I think I ran out of time. I'm not sure if I did. I had it all ready. I had done the work, and then I completely forgot, or I ran out of time. RH. In my webinar tonight, I'm going to be discussing round numbers. I'm going to be discussing all the peak Ds, the peak Es. This so far looks like a single leg 8 to the upside in restoration hardware holders. But these are the criteria that I'll be talking about when I get back. Make a note, I've got to get back and talk about RH, but I also want to talk about the financials, the XLF. I want to be talking about the home builders. I'll be back. Thank you for the blessing. JP.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So there's a technique that I talk about very often. It's called the single leg A up. It's single leg A syndrome in the Chapman Wave methodology. Well, we saw it in the RTYU. This is the 18. This is the E-mini Russell 2000. Went to a peak D in the 10-minute chart at 10.10, goes to 1690 round number high, and then it plummets. Maybe that's a Draghi-initiated slide, whatever it is. Goes to a round number low of 1678, and then it has a V-shaped formation, and it goes straight up, and it goes to a slightly higher high, and then a higher high is at 1690.70. Will this be a pullback that is that single leg A syndrome, because if it takes out halfway of the gain, there's a real good chance to give most of the gain up. Reason why I mention it is if you look at this chart, there's a single leg A to the upside. It actually is a leg A, and this is a Restoration Hardware holding. Restoration Hardware holding was doing nothing at going to the 96-ish area, 96 on the 1st of June, has a little bit of a climb every day, goes to the upside, and then bam, comes out with earnings 3 days ago, and that was spectacular. It was at 118.73. Next day it gaps up, and the gap low is 142.47, spirals to 164.49, and then what does it do? It closes at a round number 155. So I have a rule of thumb, and I'll talk about that in a moment. Yesterday, it has a round number high of 160 and a doji candle, what I call a Chapman Wave silent doji. The technicals are still very good. But what I was going to say at the time yesterday, and I think I ran out of time or something, so I'm going to do it right now, is that if there is one more round number, and I hadn't actually seen that 160 round number yet, that would confirm for me that there is now a chance that if within 3 sessions after, that's not yesterday, it's within 3 sessions afterwards, that's today, Friday, and Monday, there is a close below the 142.47 level that was made on the gap up on the 12th. That'll probably be a single leg A, and it should fill, at least get to the 131 area of the 9-period exponential moving average. That's the bearish side. The bullish side, and one of the reasons why I wanted to do this yesterday, but now I can do it today, is I wanted to outline and say the rectangle formation could go like this. You could have a rectangle with a shorter time frame, saying that within the 120 minutes, let's say, if there is a base of support, you could get a peak A, B, maybe even a C and a D, all within this rectangle of the high of yesterday that was round number 160, and the low of halfway into the body of the candle, which is somewhere around 150. So between 160 and 150, a break to the upside of 160 round number negates the negativity and says, whoa, now you can retest the high of 164.49. And a break of the low of 150 says, uh-oh, you're probably going to retest the low that was made at 142, gap up the low of the 12th. So that's the way I learned over the years to look at it. You could actually use this as a trading methodology. But in the meantime, back at the ranch, I'm just saying that if you were short and you are still short and you're in the money, those are the parameters to watch. My rule of thumb with this particular formation, the single leg A, is if there's a round number within the top to the next bar, that becomes your level of absolutely critical level. A close below that round number, in this case 160, speaks to bullish action. A close below that one, what did I say? Gosh, I should remember that 150 level says, whoops, downside activity. Good. So I hope that helps. Now, in the main, I've still got leg C in the weekly chart. I've still got leg C in the monthly chart. Restoration Hardware represents very much this mega bull phase that we're in the coda phase, and therefore big pullbacks have to be watched for entries to the long side, even if you're short. In fact, you could. I'm a little upset in a way because I did want to keep a long position as an intermediate term position and have short positions as more trading and kind of more in weeks rather than months. But I'm satisfied. We had from I think 12% to over 30% gains in the SMHs as money was taken off that position. We had some real nice gains. Now we've got a little more risk going on. I've got to be careful. Dollar gain has been very nice. So tonight's really important. We're going to start setting up what to look for, why to look for it, and what should start to work over the summer on the long side, what could be really good short positions, intermediate term short positions even. All right, so now back to our story. So that I did that, and I was asked about another stock. What was I asked about before? Would I look at, CARB, C-A-R-B. This was a recommendation of mine way back. I still keep shaking my head. Way back in the 23s, I think it was. It's trading at 41.02. It's at leg F in the daily chart. The way it's working the 9-period moving average. Oh man, look at this. The 9-period moving average. Ever since it broke above the 9-period moving average on the 24th of April, it has walked that line and not closed once. It's touched it many times, not closed under that line once. MACD is good. Stochastics at 88%. On balances volume is very good. I think it's getting a little toppy, but I'm making a list tonight of the stocks that we've missed, like a Twitter. So I keep shaking my head. Still waiting for Twitter to look at this. Oh my God, up another 2 today at 46.19. It's really tough. Stocks like this. How do you jump on board when it gives you no room? Giving you no room is a hint to say, just get on board. Now you can't get your full position, but get on board. At least you're in it. We're not in it. So I'm going to be talking about that mistake, how to deal with it. We've dealt with it quite nicely in other areas. Look, that down position that we were long, had a really nice gain, and then flipped to short that Thursday, and then was down sharply. So we made money, and the next day it gaps up, and all things look good. I said, nope, we've got to go back to the long position. So yeah, I'm able to switch on a dime. Well, in this case, a dollar. All right, now let's get back to our story. I'll talk about this tonight. XLF. If yields are going up, the XLF should be with money center banks. Yields should be helping, and it's not. Down 28 cents to 27.57. Still up above the 26.72 low that was made just about 3 weeks ago. Not good. There's that lowercase h pattern making even lowercase arch. Financial Spider, S&P Spider Fund. These financials, I don't know. This is a problem. KRE, which we are still long and making money, but I'm not so happy about the 63.99. Nope, we're down a fraction. This KRE has held much, much better than the money center banks. This is the S&P Regional Bank. Not doing that great. I'm going to have to make decisions here. Not afraid to. I think later on, maybe in the summer, there'll be a buy. Meantime, we'll be back. Dow's now down 31. S&P's up 6. Be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So here we go. Questions. The DAX. So I'm going to go to the DEDOW. DAX is right. Whoa, look at that move. Up 7 at 429.96. That's what I mean by bifurcated. It was fading. It's fading. Then the Dow futures, of course, are up sharply. I think that's the reason why the DAX went up. Let's see what it does tomorrow. But the weekly chart says, yeah, this is not just another one of those bounces. Monthly says, yeah, this is good action, but it's only halfway through the month. So let's see if it can hold whatever the gain is. This is it's up 1.73%. That'll be the same as the German DAX. I'm looking at the Dow Jones DAX, which is made up. It's a little different, but it has exactly the same chart formations. So if it's able to close above the peak F high that was made at 426.90, 432.13 on the 22nd, I would say that that's positive. Let's see what happens. I got a feeling it's going to stall. So let me go to the next question. Boeing, this is it. I think Boeing at 274.48, it opens with a round number 372 all-time high, pops up to a higher high on the 7th of June, and now it's pulling back. So that high of 374.48, I'm trading right now 361. Now I think we're going to see more of a consolidation, and I'll talk about this tonight. If you're looking at the PPA, which is a peak D that was made in the power shares, aerospace, and defense, it has been helped by Boeing, but this has got the Raytheons, the General Dynamics, LMT, Lockheed Martin, and I think that is a pretty serious high that it's made, and it should consolidate for many weeks to come. The next question is UTX, which we are still long from the 190s, is trading 126.71. I'm looking at this as one of the big tells in the Dow, and the cyclicals of the Dow, to tell me what's going to be happening over the next 6 months. I'll talk about it tonight. How this responds to weakness. It's down 0.17%. The Dow's down 0.12%. So we'll see how it reacts is going to be very important. So it's holding okay right now. Next question I had was GE. I don't want to do GE right now. Say this is a forbearing of weaker prices to come for GE, whether it's the overall market, I'm not sure. Next question is, a lot of people ask the same thing. Caterpillar. Yep, Caterpillar had a really nice rally, and then it sort of stalled. It's making the arch formation. But in the weekly chart, that moved that from the all-time high of 173.24 down to 138, was that? 138.05. That's a huge percentage move. I think it needs time to digest those gains. Next question is JP Morgan. This goes into the category of the financials. I know everybody's talking about JP Morgan as being just a wonderful, wonderful company. Hey, the chart says it needs more time. Then I think with Goldman and some of the others later in the year, I'll talk about that tonight. How do we prepare for that? Well, how we prepare for it is going to be very important. Trading down $2 at 107 today. So it's on my list of watch stocks. Sarah wants to know XPO. So XPO is in the rails. It is, I think logistics, they do the organizing, I think, for the rails. It's a fantastic company. It just spiked in the cup formation to a peak D. Today makes the peak. And let me just see if there's a round number that I can check out. Round number. No round numbers, 115.40, no round numbers yet. Okay, so it's got a peak D. The MACD is good, not great. Stochastics at 86% pulling back. And I used to have this weekly chart notated. Well, I don't have it notated now. And all I can say is that the weekly chart is still holding very well. 107 is the 9-period moving average support in the weekly chart. This is going to be part of the tell. Why? Because I'll be looking at the IYT, which is the transportation index. Peak D makes a Chapman Wave 2-bar reversal, and it goes to 201 round number high. The number of round numbers here, there's just, to get a round number when you're dealing in the digital age is just so hard to get. And here we are all over the show. Look at this, NVIDIA, another big tell for me in the semiconductors. It makes, where was it? It goes to 268.55. Where was that round number? It had a round number high earlier today. Oh, it took it out. All right, so that's out of the way. So we can get rid of that. But it's going to be a very important leg E. How NVIDIA, leg E in the daily, leg E in the weekly, leg D in the monthly. Spectacular move. How it holds this spectacular. This is a very familiar pattern to us. Very often you pull back, you make another right shoulder. This is the head and shoulder. And if you start, if NVIDIA closes under 257, 11 points lower than where it is right now, in the next 2 weeks, without going much beyond 272, I think we've started to see a confirmation that the semis could have a real problem over the summer. We don't know, of course. JBHG, JBO, I had that all notated. I wonder if it's still notated. Nope, blank. Monthly chart is in E, A, B, C. Weekly chart is in leg C, A, B, C. And I'm not sure yet, A, B, C, D. I think it's an E in the daily chart. Looking for round numbers, no round numbers. Not yet. Oops. No, that's not. Okay, so JBHT, JB Hunt Trucking. Very good action, all-time highs yesterday. These are things I'm going to be watching and talking about. You can't expect that at all-time highs that there can't be some kind of a pullback. But when you're making all-time highs, it makes the market a really big turn in the market, down for days with triple-digit declines. S&P pulling back 3, 4, 5% in a short period of time to really make the new high list shrink, because new high lists keep wanting to bump into every day they make a high. It's a new high. So that's, we'll have to watch that very closely. Now, I wanted to do something while I've got time. Any questions? No? Okay, I'm free to do some things that I wanted. Within the context of the markets, I'm going to be looking at the different sectors that had worked and then were stalling. So you've got the home builders, which had a fantastic rebound from the 2008 catastrophe and rallied to 369.15 the week of the 26th of January, the same week that the S&P and the Dow made their highs. That's an F/C in the monthly chart. At this particular, when you take Toll Brothers, one of the really great, what happened? When you get to one of the really terrific companies, Toll, and it's not doing much after really good earnings, and in fact, it's making lower lows. It's gone from a high back in January. In January, it goes to 52.73 from the 23 lows of 2016. That's a spectacular move in 2 years. And then what does it do? It's given almost half of it back. It's a 38.94. So the question is, what do you do with the S&P? Let me just see, SPX.X. What do you do? in a daily leg G maybe of the S&P. Well, I've got it's a G/D. So G is what you want. Going in the alphabet, you can't go higher than a G. You have to rename it. So the D is perfect. I'm at a D right now in the S&P. At D, other things can happen. That's all we have to be thinking of. I'll give you parameters as soon as we return. Tonight's webinar, go to the front page of TFNN. I think it's going to be something I hope it's something special. I like to put a lot of effort into it, but it's going to be absolutely current. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. So just a quick word. Duncan, that was mentioned. What's his name? Chanos. Chanos is gone. He's been short for a while. You know, Chanos, he has the money and the patience to be right over a period of time. Not many people can do that. So it's at highs, it's at all-time highs. I've got a leg C in the daily, leg C in the weekly, and a G/C in the monthly. I don't know. I think it's looking pretty good. So all I can say is I don't want to fight against Chanos, but my charts are, and they're saying Doji candle leg C still looking pretty darn good. Okay, so let's go to this now. Tonight's webinar. This is what I'm going to deal with. All the yakety yak. I'm going to try to do that as briefly as possible. I want this to be functional. I want us to be saying these are what we're looking at. This is what we want to buy. These are positions. I'm going to talk about the positions in terms of shorter term and intermediate term. Why the Dow and the S&P still look in the longer term look good. Why I'm still saying that until I hear the chatter about the stock market this, the stock market that, I hear nothing. Even on the Memorial Day weekend, one person said to me that they discussed stocks over the weekend, and that it turned out, I said, oh yeah, but that was probably a person you always speak stocks with. He said yes, so that doesn't even count. So I have to tell you, it's not being spoken of, and until it is on the tip of everybody's tongue, I don't think we're making a major talk. And that coincides with what I'm looking at in this third phase of the coda period. And I'm going to be talking about that. In the meantime, I'll be telling you what I think in terms of IRAs and KIOs and all that, what I'm thinking you should be doing, how you should modify some things, how you should ignore others, how we're going to try to dismiss the news. Why this particular period? Because see, a lot of things going on in the economy, especially with all the good news. Now maybe tariffs and stuff like that could have an effect. So that's what I'm going to be talking about. I'm going to be talking about the Dow. Of course, we've changed our positions now in the Dow and the semiconductors after fantastic gains. We're switching our positions. I'm treating it as short-term positions at the moment until I get proof. I don't even have a sell signal in the Dow and the SMHs or the S&P yet. I have to get that when they start closing under the 9 EMA. Hey, go to the front page of TFNN. Check it out. Free 1-month subscriber. It's a subscriber webinar. You can get in by taking my subscription for 1 month.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.